podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to the Hedged Edge. I'm your host, Jeff Eizenberg, and today we're here a few days removed from the latest January 12th, 2021 USDA crop report. Today, we've got the opportunity to take a little bit of benefit of time in that the report was 2 days ago. But our team, what we've decided to do is get together a few days after, evaluate the report, and digest what markets have done. So today, I am once again joined by my esteemed colleagues, Jody Lawrence, Lawson, and Kevin Bost. We are with the goal here today to give you guys a short recap of what happened with the report, where it went, and ultimately how it's affecting prices and your bottom line. So welcome, gentlemen. Thanks again for joining the show.
Good to be here.
Good to be here. Thank you.
Hello.
Yeah, good. Well, it's a COVID world still. We're all still, either home or in isolated offices in California, surrounded by wine, Ron.
Someone's got to drink it.
Yeah, guys. So we here we are. It's Thursday. We've had a couple days to digest this last report, and we might as well just jump right into it at the onset here. The biggest shocker is in the grains, right? We've got this cut in production and yield. Jody, kick it off here. What were the big movers on the report?
Well, the biggest number that moved the market was USDA cutting the 2020 final corn yield by 3 bushels an acre. Everybody in the trade and just from farmer feedback and everything else had it, going down a bushel to maybe a bushel and a half, and 3 bushel cut per acre, is just call it 250 million bushels right off of the bottom line of the ending stocks. And while it was initially shocking, there were some other numbers in there that the USDA has a tendency to do to try to offset one major change with some other minor counter changes. And the first number everybody saw was ending stocks at 1.55 billion in corn, which probably does not justify what we finished today, 530 old crop corn. But when you dig into it, and they saw the 3 bushels an acre, and on the other side of it, the USDA forgot to call anybody in Brazil and Argentina and decrease their crop, even though their own governments and all their private crop scouts and analysts have their crops significantly smaller than the USDA did. So the whole report was bullish, corn in particular, and where we are in the acre attraction business for 2021 is that if corn's going up, beans are going up with it, because corn can't take 93 million acres and beans only get 86 million acres this year. So a lot of follow through, and the demand numbers are, through the roof on everything, which contributed to all of it.
Right. And then as demand continues to increase, then we're, forced to start looking at how that's going to impact, prices further. And then, ultimately then we're in a very critical time for planting decisions as well. So very interesting timing for this bullish report. I guess when was the last time that we've seen such a bullish January report. Any thoughts?
I can remember some limit down ones. I can't remember too many limit up ones.
Right. Usually the other way. Yeah.
Usually we get the heat in the summers what drives things. We don't get harvest time rallies. That's very unique.
Yeah, very rare. Very good. Well, yeah. So we've got the big picture changes that are happening, and then also you mentioned South America, Jody. Lots going on down there. Obviously, they've having export issues with their soybean processors down there and the shipping containers. How much of that factors into what's going on with the prices on the rally here in beans?
Well, during December and the first week of January, their port workers unions all got together and went on strike, which is fairly normal that they have a strike about every year. They just had a little more leverage this year for a couple different reasons I won't get into, and they stuck with it longer than historically they have because their inflation and their devalued currency have put any blue collar worker in a position that they're not making any money. They're living below the poverty line, having a job, and that stopped for almost 3 weeks, all exports and almost all port activity and all of that demand. And we're still seeing it because I'm not sure China completely has faith that Brazil is going to be back in full shipment pace anytime soon. All that demand that normally would go through Brazil got moved to the U.S. through New Orleans and the Pacific Northwest, which made our tight stocks even tighter.
And that's a great segue into the livestock market. So Kevin, we're in an interesting spot here where you've got tightening stocks, and then the report also noted that record Q1 U.S. corn feeding as anticipated here. What's the impact there as it relates to the cattle and hog markets?
Well, the impact of this big run up in feed cost affects both markets gradually. There's no immediate impact. It takes a little while for that to work its way into smaller, market-ready livestock supplies. And so in the case of cattle, for instance, we do have a big number of cattle on feed, which justifies, the notion that feed demand for corn would stay elevated for a while. But as far as immediate demand or immediate impact, like on cattle prices, it doesn't really happen. Of course, you get a big sharp run up like this in feed costs. You would think, well, that would reduce the demand for feeder cattle, keep the placements down. Doesn't really happen that way, step for step, because of course, the big increase in corn prices has driven the feeder cattle prices down as well. So it doesn't really impact the prospective break-evens from cattle feeders on that angle. As far as hogs are concerned, this is if this kind of a feed cost structure persists, then it does pose a very real threat of a new round of herd liquidation. But when you think about that cannot affect the market hog supplies until late next fall, because it takes 6 months, like almost 10 months from breeding to finish, right?
Right.
So if hog producers on a large scale were to cut back on breeding activity right now, which it's not really certain that they are, but if they were to cut back on the breeding activity right now, you would start to see the effect of that in tighter market hog supplies like October, November. In the meantime, the futures market has built up big premiums, very optimistic premiums in the summer contracts. And as a trader, that's very interesting to me. Looks like a big trading opportunity, a big hedging opportunity.
Lock in your Q2, Q3 prices now, huh? Is that what we're saying?
Yeah. Yep. Precisely.
Yeah, and I've got this stat here I want to share and get everyone's feedback on. This, to me, is interesting. Let me know if you guys can see the screen. But the USDA publishes the corn prices, our corn prices versus Brazil and China. And here's one from just last week. So kind of dovetailing into the report, we've got U.S. corn at this time was marked at $4.57 a bushel. So assuming that was a December corn. And then we've got Brazil at the same time was priced at $6.42. And then China's corn or equivalent amount of corn price in China was at $10.80. So talk to me about this, guys. What are we thinking? This is got to normalize at some point.
Normalize is kind of relative because I think this whole thing shows that where China's real concern is, and you're talking about a bunch of countries that have a very high level of food and interior inflation, and China is one of those, as demand is outstripping their ability to be self-sufficient. And it used to be you could kind of count on corn, probably U.S. corn about half the cost of China, but I'm not sure how it works now with the dollar being as weak as it is. But I think what you have a worldwide shortage of corn, and there are places, China, and other parts of the world that have more acute shortages. That if U.S. has a very unusually high percentage of the world corn market or storage right now.
And Ron, you've talked on this quite a bit. The rally of the yuan versus the dollar. How much of this price increase is just simply currency appreciation?
Yeah, I think there's a good measure there. The other thing to consider is that we see it in all commodities. So, for instance, cotton's $1.06 in China, and we finished today spot month 81 cents. So, all of the commodities have a similar type of gap there, and it goes to our theme long term that China is going to have to import food and fiber because they simply don't have the arable land to produce enough for themselves. So this is not something that's going to go away in one season. That's for sure.
Right. And then there was another note that I had heard, Kevin, related to hog prices, that producers in China, even at these elevated prices, are still earning, $360 a head or something crazy in comparison
it's an excellent point, and it's an incredible amount. But China's government is committed to restoring the Chinese pork supply. This really, I think, helps put that last graph in perspective, almost to the point where the price is irrelevant for a while. Consider this, that the African swine fever reduced the Chinese hog herd such that their reduction in hog supplies in China was greater than the production in the entire rest of the world. You think about that for a second. That's how the reduction in hog numbers in China was greater than the rest of the world produces together. Wow. So they have a tremendous herd rebuilding program underway. So you look at it from that angle, you can't rebuild the hog herd without feeding them grain, right?
Right. And coming back
I'm not sure.
Yeah, go ahead.
No, I was just saying, I'm not sure that the price of corn is really very much of an issue for them.
And coming back to the report, just stick on topic here. The where are we going to see these numbers showing up? I mean, just simply in exports, right? We're going to see the export numbers for cattle, for hogs, export numbers for grain continue to rise. And I think that there was an interesting. I'll share this as well. The USDA published a tweet online that the day of the report, and you can follow it here on following ourselves at RCM Ag Services or ag_ag, RCM_ag. But the tweet says, hey, we're going to take questions. It's Karen Braun from Bloomberg. She published a question. We're curious why a lot of people are wondering why U.S. corn exports were reduced with such a strong commitment level. And USDA responded that exports reduced sharply on lower supplies, but also higher expected prices. So I guess the question begs the question, how much more of this we're going to continue to see in these reports where the USDA is revising or adjusting exports on these numbers to affect the way in which prices move?
We've got a very cynical view of this in the cotton world. Even using their own data from their own attaches, the WASDEs don't match the information. The carpet doesn't match the curtains. Okay.
There you go.
So, I absolutely agree with, the views expressed so far. They're going to feed their people regardless. The regime that is in control of the country today came into power on the heels of the starvation in the 50s and 60s. They aren't going to be driven out by a similar problem. They'll spend whatever they have to spend. And I think this has been in, Jody, I think I've seen it in your work. They're going to spend what they have to spend to feed the people, period. So the idea that, number one, higher prices are going to stop them from feeding their people is ludicrous. Number two, they do have the phase one trade agreement that says they're going to keep buying. So how is it that the USDA then says, oh no, they're going to reduce their imports? In fact, on the cotton market, we had our weekly export report today. We're running at a pace where we're going to run out of cotton in 10 weeks. We have 20 weeks left in the season. And again, the USDA's numbers, it's been our experience that if they see a problem, let's just say a million bale problem, I don't care what that is, they won't report it all in one report. They'll do incremental changes over a couple of reports. They don't want to be a market factor. So when we started the season, they were predicting 19.5 million bales. Our export report, our last WASDE, it's at 14.9. So almost 5 million bales less, and it continues to shrink. And it's the same thing. Exports continue to rise. Consumption continues to increase. Oh, pretty soon we're going to be out of the COVID coma, and the rest of the world's going to come back to life. And we've already seen that in the cotton side and all along the pipeline. The demand is there, and the inventories are not.
Yeah, that's a good point, Ron. And thanks for making the shift over to cotton as well. I mean, they're incrementally lowering these expectations, but they're not just slashing them. So, you've seen, you've reported on this. There's, difficult conditions across all across the country. You mentioned that the bales might be coming in light. I mean, where do we see some of this really showing up?
Yeah, domestically, we're showing the crop is shrinking from expectations. We looked at the classing office data. Just to get to the 14.9 production, we have to class 2.5 million more bales, and we just don't see that being out there. There might be 1 million left to class. There's only a couple hundred gins left running in the whole country, so we just don't see where we can't get there from here, if you will, on the domestic side for production. Right. On the demand side, China's pretty much out of cotton. They're out of yarn. They've spun. They've taken everything they've got on the shelves, and now they're buying yarn from Pakistan, Bangladesh, Vietnam, and Turkey. And again, the export report this morning It showed a really strong, we need to average 85,000 bales a week to hit the USDA target. And today we were over 300,000. So again, we are quickly getting to the point where we're going to be selling more cotton than we have. And that's not a debilitating thing for price. The other thing is in respect to the grain markets, talking to bankers down in West Texas, the typical thing is the farmers will go in and they'll plant wheat as a cover crop. You guys don't know winter wheat. They'll get it in there. And then depending on price, they'll either spray it and then drill in cottonseed and grow cotton, or they just let the wheat grow. The price is good. The price is so good this year, farmers are letting that cover crop mature and they're going to harvest wheat. And they'll harvest too late to get the cotton in. Okay, that's one reduction in acreage. And the other is, at this point, milo and sorghum prices are trading, as Jody explained, at a premium over December when they normally are at a discount. So one of the few other things you can grow in, say, West Texas, where the biggest production is grains, is sorghum or milo. So we see the cotton acreage being reduced significantly unless we get the prices up. Right now, with soybeans where they're at, new crop beans are approaching $12 a bushel. On a routine 12-to-1 ratio, that would mean $1 cotton for December cotton. Yeah, we're at 76 cents. So we're 20 cents too low to buy enough acres to get the crop in. So that's something we have to contend with. It was, when you look at the USDA data, you have to segment it, not in an absolute number, but again, the trend, the incremental trend. And we continue to see lower production and increased consumption, both from relief from COVID, as well as all the money that's being pumped in with the stimulus packages. People have not been able to spend money on events and experiences. They've been able to spend money on things. If people are poor, they don't want to look poor, so they're going to buy clothing. So we see consumption going up. So that's how we see the reflection there. The USDA still holds their Indian stocks on hand 5 to 7 million bales too high. Going back to talking to the mills, the people that have the cotton in their opening rooms, it's not there. The cotton that they say is not there. So that's from our own ag attachés. So again, the USDA gets a little contradictory to its own self and its own information, and it's still presenting a fairly bullish, forward-looking view for cotton.
Well, thank you for that, Ron. That's a great kind of finishing statement there on cotton, and I can't thank you enough for really doing the work that you do to communicate with the merchants and the mills, really all over the world, to be able to almost create your own analysis on where cotton is. Maybe the USDA should be hiring you.
Well, we do talk to them, and they don't appreciate it when we point out the conflicts of their own information. They have models. They have to follow their models. Okay. Can't spin a model.
Jody, wrapping up the corn, beans, the grain side, USDA, what are they going to be kind of looking at here in the next few reports, and when's the next big one? I know we'll be getting together on these each month, but what do we need to be looking out for? Planning intentions, is that our next?
That won't come out till March 30th, and I was going to ask, we're going to make that point at some point, so we're, whatever that is, 10 weeks away from that. And February report will be big because everybody is going to be looking at what they're telling us about South America, because if the if the USDA and WASDE trim everything back to what CONAB and Abari are telling us of their potential sizes, then everybody should be in line and show just how tight everything is. So, every report from here on out and every week's worth of weather in Argentina are going to be critical, because what I always remind my customers is that if you're in the middle of Illinois and take 6 months from now, because that's where Argentina is for the most part, they're on the July 14th of growing season, it's time for some rain. And if they don't get it, maybe they have 3 more weeks the crop could actually be salvaged and maybe improve a little bit. But the forecasts don't dictate that it looks that way. And their problem seems a lot like we had in 2012, that there just isn't, there's some moisture, but it's not nearly enough. And, the USDA is going to start doing that. But I also think that you look at yesterday's report, Tuesday's report, the trade immediately when they saw the USDA number for South America completely ignored it, because there was no reason for corn to go lock limit up and then another 15 cents the next night on the USDA numbers on their face. But when you look the comparative value of what's going on in South America, plus what the USDA told us about how much we lost to the U.S. crop in the last 6 weeks because of the flash drought, that's what we're trading. They're not trading what the USDA tells us about South America. They're telling us about what the USDA told us about the U.S. crop and what South America is telling us about their crop. And, when you get to March, the biggest thing there is going to be how many acres can we fight over? Because I did some backward math. You could take half of the acres out of CRP, put them both in corn and beans, and I'm still not sure you would have enough additional production that would, because everybody's waiting for this balloon to pop, that we could see something like 2019 where corn's trading 470 and then everybody got it planted. And next thing you know, you're looking at 360.
Right.
We just don't have enough acres because corn and beans are fighting over what amounts to, Ron, help me if I'm off here, 182 million acres, basically.
Yeah.
And then you add in.
There's not that many acres of cotton left to help you out either. We only going to plant maybe 10 million. You make a case it can be as low as 8.5. So even if we give up 2 or 3 million acres, that's not going to fix the problem.
Yeah. And one of the interesting things I noticed, I'm sorry, Ron, go ahead.
It's just that it won't fix your problem, but it sure is going to make cotton have a hell of a problem.
Yeah. And you look at even winter wheat acres, because the price was so high, had a higher number because it had been years and years of decline of winter wheat acreage. And I think it was up maybe 1 million acres. It doesn't sound like much, but that's 1 million acres that unless they decide to burn it, to kill it and burn it off and then go to full season corn or full season beans, because that's all you can really do after that without a lot of field prep, that you're talking about that extra acres is going to go into a diminished double crop or potentially very diminished double crop bean situation. So it's, how high, to me, beans have a real upper hand here, regardless of the fact that the U.S. loves to produce corn, in that I talked to several farmers, and if depending on local basis, but you are approaching $950 to $1,000 of gross income in some areas that plant beans and annually expect 70 to 80 bushels per acre yield. So even let's back it down to $900 of gross income. Would I rather have a crop where I know I'm going to probably have a $500 margin in potentially and only put $400 in it, or plant corn where I'm going to have anywhere from 700 to 850, where I'm going to have to get 220 bushels just simply to get to that amount of potential income. To me, beans have got an obvious advantage that may not play out, but right now, if I had 1,000 acres that I could make a decision on, I'd plant them in beans, I'd buy the seed, and I wouldn't even think twice about it.
Buy the seed, hedge the forwards, and give it a go, right? Because if you don't, the biggest thing is if you don't hedge it though, and you just plant and you do what we did this year, which was people guessed at their marketing by not marketing, then they got lucky. But if at these high prices you don't market and you buy, make the shift, there's a huge risk. So I think that to me is going to be a data point and fund flows and commercial flows we're going to have to track from this group moving forward.
Yeah, and what's happened this year, and it's much like my children's college careers. Bad behavior was rewarded in spades because procrastination and not sticking with the plan has made every farmer a whole lot of money over the past 5 months.
Yeah. Another thing, not just a little cautionary word in the bigger world around us. People tell me all the time, well, there's, cotton shouldn't be worth 80 cents, 85, whatever, pick a number. And I just respond with, well, is Bitcoin supposed to be 40,000?
Yeah.
Is Tesla supposed to be worth more than the next 7 car companies combined?
Right.
We're in an environment right now where you have to talk about price, not value. You have to talk about levels, not worth. And if more money wants to be thrown at these agricultural markets, as it seems capital flows show it does, price is just a number. It's not value, it's not worth, it's just price. And therefore, we just have to follow the price. God knows what it's worth, but that's the price is what it closes every day on the board. So you're going to keep that in mind.
Well, let's throw Kevin one last chance here in the cattle and hogs. Any final thoughts, Kevin, for the next kind of reports coming up, whether it's WASDE or any of the cattle and feed reports that you think people should be paying attention to? And then we'll wrap it up from there.
No, we got the cattle inventory report coming up in a couple of weeks. We only get this twice a year, but it's not a market mover. It does tell you overall herd size, total feeder cattle supplies, that sort of thing. But we're in for a pretty quiet stretch, I think, in terms of information. Apart from that,
guess we'll all wait for our Memorial Day steaks that we're going to buy. Hopefully, we've got a vaccine in everyone's arms and we're all singing Kumbaya with, what do we got? We got tickets. Jody's got concert tickets.
We got power. I don't know what y'all are talking about, 80-cent cotton and, $5 corn for, because this is it right here. This is all you need to invest in. You don't need a marketing plan.
Right.
When do they draw those numbers? Tonight?
Mega Millions is at 740 million, and that's tomorrow. And then Saturday is Powerball, and I think it's at 650 million. So.
Can you buy tickets for that online, or you have to actually still go to a gas station?
You have to physically get out into the COVID-infested town of Columbus that you live in to go get some. I just sent Shannon. Your house is destroyed anyway. Get the
mask on and go buy some Powerball tickets.
Exactly.
All right, guys. Hey, listen, I appreciate everybody taking the time today. It was a great recap. Always good to visit. And we'll be here again the same time next month for the WASDE report recap. And as always, you can check out our podcasts on rcmagservices.com. You can also visit us on Apple Podcasts or YouTube. And if you need more information or have questions for any of our experts here, each of them write a regular daily and or weekly commentary. You can always reach out to us at agsupport@rcmam.com. And we appreciate everyone taking the time to listen. Thanks, guys, and have a good rest of your day.
See ya.
All right, thank y'all.
See ya.
Listening to The Hedged Edge. Links from this episode will be in the episode description of this channel. Follow us on Twitter at ag_RCM, like our Facebook page under RCM Ag Services, and visit our website, read our blog, and subscribe to our newsletter at rcmagservices.com. If you like our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear them.